Comrades, hey, this is Carl from Ushanka. I'm coming at you with another precious metals video. Please forgive any sniffles or coughs. I'm recovering from a cold. As you can see, things are a little different than the last video. The cuss jar is a lot lower. It is half empty, as some would say. But you'll see that we have a new tube. How about that? 2014 Silver Eagles. We hit a little Tourette's after the last video. We had enough money in the jar to buy the tube. And so now we have 69 silver and we still have our 3 gold. And so you need to go back to the other videos to get the background behind my cuss jar and about these coins and what the strategy is. What I'm here to tell you about today is strategy 1. Adjusted for trade costs. I wanted to find out, a little bit more about what's a true ROI when you consider the cost of trading metals back and forth, playing the ratio. Okay, so you got to go back to those other videos to learn, where I'm coming from. Otherwise, this is not going to make sense. And before we get started, just in case you were worried I wasn't going to remember, the Commie Obama hat is still for sale at commieobama.com. And I wanted to warn you guys, if you're in the Bay Area, California, San Francisco area, don't wear this. You would think that maybe that would aggravate the people. It wouldn't. I've done it. What they do is kind of gravitate to that red star and the hammer and sickle. They see the Obama name on one side or forward here, and they think you're one of them. So, it's a big disappointment. These people don't understand that history repeats itself, and they don't give a shit about any of you bourgeois folks that want to wear this hat. So there you go. Now it's going to be slides. So the first slide. Remember, what I'm telling you is just what I'm learning in my own investigation, my own research. So double check my math. Do your own research. Second, we're not talking stacking, we're talking investing, and the idea behind investing is you put money in and you take more money out later. So I've graphed the ratio from my data, which is the last 10 years, and you can see that gold and silver really are stable except when the greatest nation on the planet elects a community organizer. But basically it's the average over the last 10 years is 58 to 1. And you can see it stays within a range of plus 10, minus 10 for the most part. And just to remind you, the cuss jar strategy, the idea was I was taking cash out of the jar and buying silver, that I want to accumulate gold, and that it's not built around an investment, the idea of making money, although that'd be great. It's just been a lot of fun to get, dabble in precious metals. And it's time-based, that when our dear leader leaves office, if he does, then that's when I'm going to sell this collection. So it's just been a way to throw dollars in, and I average about $100 a month. And that translates into this strategy of if somebody were to take $100 a month over a course of 10 years, what do they get? I have come to a decision on my cuss jar strategy, and that is I am going to trade silver for gold when the ratio is 48 to 1. So basically 10 under the average the last 10 years is my trigger to trade my silver into gold. It might not even happen. As you can see, the past 10 years are only 3 triggers were hit. So that's what it is. Alright, so our goal for Strategy 1, this update, is to recalculate the strategy, my previous video, to calculate for trade fees. And just, in case you haven't noticed, I didn't mention in previous videos, but all my calculations are based on 1 ounce increments. So the trade fees, I'm not going to read all through these. Basically just hit pause when you hit a slide that has a lot of data in it. I'm not going to read through it. But basically I took the basic numbers that I think are common out there as far as trade fees. And we're going to compare ETFs too, because it deserves attention. So remember, we only had 3 trades over 10 years when we had the ratio set I think it was at 50 and at 75. And so you can see the trades and where those numbers, came in based on, with the premium. So you can see lesser volume was purchased in the premium column, a little bit more in the discount column, and of course the ETFs, because you're only paying a $10 transaction fee, you're gaining more in the equivalent of metal. So here are the results, and again, hit pause if you want to look at the fine print. Basically, physical premium, which is what I'm doing with my cuss jar, is the absolute wrong strategy to have with an ROI of only 49%. If you're looking at an investment and thinking over 10 years you're only going to make 50%, that's really sloppy. It's really poor. You look at what's going on in the market. Even if you catch Apple at the wrong time, you're still going to make probably more than that over 10 years. So the discount was at 80%, and that's good. That beats stacking. So you'll find people on YouTube that go after the discount silver, the industrial silver, the bulk silver, and they get those better premiums, and they can get a return of 80%. But look at the ETFs, 95%. So what's the reason why you're not doing ETFs? I've heard all those reasons. You don't have to even. I know you're already clicking into the comment box. You don't have to type it. I've heard it. But the idea is, do you want to make money on what you're doing, or are there other reasons? And I touch on those things here. So real quick, the lessons learned: the ETFs win hands down. You're making money. You're not just preserving wealth. You're creating wealth. Trading premium metals is a loser strategy. Stay away from the American Eagles, like what I'm trading right now in my cuss jar. Unless there's a pop somewhere, and you catch it right, you're not gonna do well. But stacking is not much better. It's the second worst solution or strategy in this scenario. I want to go over some pros and cons, because obviously that's probably what a lot of people watching this video are thinking right now. What are the good and bad on this? So stacking, of course, the stackers are going to tell you they have all their metal on hand, and that they're preserving wealth, and that's true. As far as cons, though, they don't have cash on hand, because the theory is that they're putting money into metals as they have the money, and they're not creating any wealth. But there's some stackers out there that dabble in every kind of variety of silver, rounds and bars and coins, and they're having a lot of fun with the collecting part of it. And so I'm not going to knock them for choosing a path that gives them a lower ROI if they're getting some other enjoyment out of it. But if you're not getting enjoyment, if you just got these bars sitting in the corner, you're really doing yourself a disservice. You were attracted to metals for probably the right reasons. There are people that can't be trusted out there that can influence your financial well-being. So going with metals might have a little bit more secure route than keeping your money in the bank or in the stock market. I understand. So stacking, the reason getting into stacking makes sense, but look at the numbers and look at what you're doing to yourself as far as not creating wealth. As far as the premiums go, you get metals on hand, you have cash on hand. Look, I over 10 years in this scenario, with the triggers we set, there were only 3 triggers, only 3 transactions. And so between those transactions, the $100 a month is just stacking up. If you have a cuss jar or you have some other place that you're putting that money, it's just stacking up waiting for the next trigger. So you have cash on hand, and you have metals on hand. You have the advantages of a stacker in the sense that you do have metals on hand. But, in the premium sense, you have the worst ROI. The discount, same basic things there. A moderate ROI is kind of really the differentiator there. But the ETFs, look at that. You got the best ROI, you have wealth creation, you are liquid. Don't tell me that the stock market won't be there one day. My entire lifetime, I think there were 5 days where the stock market wasn't available, and that was right after 9/11. So unless you wait too late, you should be able to see so many warning signs that tell you it's time to get out. And in those warning signs, if you're in the ETFs, you're making money, because the warning signs are driving the price of gold and silver up. But the cons, you don't have cash on hand and you don't have metals on hand. So, going back to my first video, some advice. The only advice I'm giving you is if you're going to be a precious metal investor, have some physical on hand. Book recommendation. Since the last video, I read this book by Matthew Hart called Gold. I learned probably 80% of it was new information to me, so I learned a lot. 10% validated lessons I've already learned, and 10% corrected lessons that I've learned. So lessons that I've heard from people on YouTube and the internet were incorrect, and this book has corrected those. One area specifically is the manipulation of the price of gold. This guy explains it, has examples. I learned a lot. It wasn't what a lot of people on YouTube think it is. So, definitely get this book. It's worth a few bucks. All right, to keep us intellectually honest, I wanted to throw a couple questions out. Gold, if you haven't known, China has been buying gold, and a lot of the transactions are secret. What they disclose suggests that they are buying gold faster than it's being mined. Okay, so the gold bugs, and I consider myself a gold bug, look at that and say, wow, that this is a reason for me to be buying gold. But they're also jumping all over U.S. Treasury bonds, and isn't that what we're running away from? So why are they just as happy about buying U.S. bonds as they are about gold? And of course we could say that someday they'll stop being happy about the bonds, especially when we stop paying the interest on them. But still, the question is, we can't. Why are we pointing to this entity as a buyer of gold? Therefore, validates our decision when we are not going out and buying U.S. Treasury bonds. So, just want to throw that out there. Another thing, some of the metal people think there's a disaster on the horizon, and they can point to some valid items, events in the going on in the world. And we've covered some of that in the last video. But if you really believe that, and obviously people that buy and stack metal believe it, why aren't they doing other investments where they can benefit from it? And basically just shorting the S&P is easy on, as an ETF. There's other ways to go out there and invest in a way where you're betting on things to go down. Look at JCPenney today, was down 10%. Retail has always been hammered because of internet activity going on. You can pick these things out. It's easy in hindsight, but there's other things out there that you can invest in where you will benefit from the decline that you believe in. So are these YouTube people that are stacking metal believe things are uncertain in the future, so much so that they need to get in something safe? Why aren't they also investing in shorts on the market? And maybe they are, they just haven't mentioned it. So I want to throw those two out. As far as next video, I'm going to do a video on Strategy 2. This is about larger transactions, about a serious investor. We're going to limit silver because at some point it just doesn't make sense to back a truck up to the house and load the silver to trade in. And the idea is to also accumulate gold. That we know gold is pulling away from silver slowly over time. So the idea is in these trades, you set aside some gold and it's no longer traded back in for silver. So I've already started that spreadsheet, and I'm excited about seeing where that goes, because I think that's a realistic investment strategy, where strategy 1 here was kind of based off of my cuss jar, and it's smaller dollar values, and I don't know if it really applies to most people's situation. I still want to calculate for inflation, but that looks like a headache. I still haven't figured out the math on that. And then, of course, I'm welcome. Would welcome any ideas, any pointers. Would you like me to take my data and address a different kind of investment scenario? Just send me a note. Let me know. Thanks, comrades, for joining me, and have yourself a great day.